What are CFDs? Ready to explore the dynamic world of finance? CFDs offer a unique way to capitalize on market movements. Let's dive in. A CFD, or contract for difference, allows you to speculate on the price movement of an asset without owning it. You profit from the price difference between the opening and closing of your position. Benefits of CFD trading. CFDs offer several advantages. Diverse markets. Trade a wide range of assets, including stocks, indices, commodities, currencies. Speculate on the performance of major stock indices like the S&P 500, FTSE 100, or DAX without directly investing in individual stocks. Trade precious metals, gold, silver, energy, oil, natural gas, and agricultural products, wheat, corn. Forex. Profit from currency fluctuations, such as the Euro-USD or British Pound-USD. Leverage. Amplify your potential returns, but be aware of increased risk. With leverage, you can control larger positions with a smaller initial investment. For example, with a 100 leverage, you can control $10,000 of an asset with just $100 of your own fund. Short selling. Profit from falling markets. If you believe a stock price will fall, you can sell a CFD on that stock without owning it or buying it before. You can buy it back at a lower price and profit from the difference. Flexibility. Trade 24/5 with no physical asset ownership required. Dividend benefits. Dividend adjustments. While CFDs don't grant direct ownership of underlying assets, you may benefit from dividend adjustments. When a company announces a dividend, the CFD price is typically adjusted to reflect the dividend payment. This means you can potentially profit from dividends without owning the underlying asset. Risk warning. Factors like leverage and market volatility can impact your trading results. Use risk management tools like stop loss and take profit orders. IFC Markets provides a robust platform for CFD trading. Start with a demo account to practice and gain experience. Utilize educational resources available to enhance your knowledge.